like you to consider a situation in which an employee is able to embezzle over $2.6 million in 1 year. Consider the major financial implications and fallout this could have on a business. Now, consider that this employee embezzled over $2.6 million a year, not for 1 year, but for 20 years. At the end of these 20 years, the total amount stolen would be $53.7 million. Rita Crunwell, a city controller in Dixon, Illinois, carried out this fraud. She was able to do this in a number of ways, including entering false banking information and creating over 150 false invoices that she entered for payment. At the end of this whole ordeal, the city of Dixon, Illinois was forced to file for bankruptcy. My name is Alex Rowley, and today we'll be talking about how to properly enter invoices into your accounts payable system to prevent accounts payable fraud. We'll talk about three-way matching, approvals for additional charges, reimbursement and petty cash requests, and how to properly secure your AP documentation. Three-way matching consists of matching your purchase order, goods receipt, and sales invoice before entering the invoice for payment. A purchase order is a document created at the time the order is placed, and this will include the quantities that were ordered and the total amount. The goods receipt is a document that generally comes in through your receiving department that shows that the goods were actually received and the quantities that were received. Your sales invoice is the final billing invoice sent to you by the vendor, showing the amount that you need to pay. Depending on the accounting software that you use, sometimes you'll have a discrepancy between the total cost on the invoice and what you're seeing in your accounting software. Generally, in these situations, if this is caused by a rounding error, management will have set up a certain amount that you can self-correct this rounding error to without seeking further approval. For instance, in my case, I have experience in accounts payable for manufacturing companies. The software we used forced you to round out the unit cost of an item to 1/5 of a penny. This meant that if an item we ordered costed less than a penny and we ordered hundreds and thousands of items, the total cost showing in the software and on the invoice may be off by a small amount. In this situation, your management may decide that you as the accounts payable clerk can self-correct these rounding errors up to a certain percentage of the unit cost per item. In my case, I was able to correct up to 5% of each unit cost, and I did not have to seek further approval for this. Things that you will need additional approval for include shipping charges, warranty, and repair costs. In these cases, you'll need to reach out to the purchaser and ask them if these charges are approved. If they are approved, you'll need to print out that response or save the email so that you can attach it to your invoice for payment. If it's not approved, you'll need to notate on the invoice the amount you're paying, less the additional charge that you are not paying, so that in the future, people can understand what you've entered for payment. Accounts payable clerks are generally in control of the employee reimbursement requests and any petty cash. Employee reimbursements can come from anything that an employee has spent their personal money on that the company should be covering. These forms have to have the signature of the employee and their direct manager, and they should have receipts attached to them showing exactly what was purchased. If they are requesting a petty cash reimbursement, you'll have to verify the amount with your management that you are allowed to pay out. For instance, if your petty cash box only has $200 in it at one time, you may not be able to make a single payout more than $100 to ensure that you have enough cash in the future. Also, if you're making a petty cash payment, you'll need to include a petty cash receipt. You'll want to attach this to the receipt that the employee brought you so that you can save it for your month-end petty cash reconciliation and have documentation of this receipt. This brings us how to properly secure your accounts payable documentation. Generally, an accounts payable clerk should have access to a locking cabinet with a key that only they and one other person have access or knowledge of where that key is. This is so that you can properly secure things like checks that haven't been printed yet, checks that have been signed but not sent out or picked up yet, stamps, and other secure information such as vendor W-9s. By putting all of these controls in place, hopefully your company can prevent accounts payable fraud and not end up in the same situation as the city of Dixon, Illinois.